Hi, Craig Morley here, President of the National Association of Appraisers. Over the past week or so, we've had just a large number of questions asked. Why are the GSEs not taking the same position that the VA has that allows the appraiser to waive the interior inspection? Now, the GSEs have provided some alternatives, but unlike the VA, it is not the appraiser's call. If I'm going to do an appraisal for a conventional loan that's being sold to Fannie Mae, the property and the borrower have to qualify. And many appraisers are pretty upset and frustrated that we don't have this option in some cases to be able to provide just a drive-by or desktop appraisal. Now, Fannie Mae has established some protocols that help to explain what their requirements are if the property and the borrower qualify. The vast majority of the orders that we've seen have not been offered as a drive-by. I was talking to an AMC a couple of days ago, and they indicated that they've seen a significant increase in the number of drive-bys that are being allowed, but it still only represented less than 10% of their total order volume. So not very many in reality. So the question is why? We're putting appraisers at risk, we're putting borrowers at risk by allowing them to go into unknown people's homes and circumstances. The lender risk matrix works. You basically, there's three things that a lender uses in analyzing the risk in making a loan. The first is the credit capability of the borrower to repay the loan. Do they have enough income to satisfy that obligation? And usually that is the income to debt ratios that the borrower may have. The second is the credit history. What is their history in loan repayment? And that's usually reflected in the credit score. The third item is the quality of and the value of the collateral that's being offered to securitize the loan. And that obviously is done by some valuation tool that determines the value and the quality of the collateral that's being offered for the loan securitization. So as we find ourselves in this unprecedented worldwide pandemic, we are seeing massive number of furloughs and job layoffs. Small businesses are being out of business, at least in the short run. So if you're a lender and you are facing this kind of situation, the risk for repayment has gone up. The second thing that we're looking at is we don't know how the credit scores are going to fare as a result of this, but if people are unable to make payments for a short period of time, it seems pretty likely that credit scores may go down. That would affect the ability of borrowers to be able to borrow money. And in the long run, that might have an impact on the overall economy, because we will have fewer numbers of qualified borrowers, and it might result in some of these folks who have been a good credit risk in the past, but because of circumstances that are outside of their control, have made them so that they either go into default or at least lower their credit score. Now, there's obviously things going on out there to try to fix that at a national level, but it remains to be seen what that's going to do. The last item is the collateral. Now, the thing that we don't know the answer to is what is going to happen to property values as a result of this. And we don't know. But there's a pretty good indication that if we go into a national recession, which we're in, then we are likely to see at least some kind of modest change in the economic environment that could possibly result in declining property values, at least in the short run. Fannie Mae does not have the ability to unilaterally take to make the decision whether they have an interior inspection or not. They are packaging these loans and selling them to the investor market. Unfortunately, risk and uncertainty increase the interest rates and make it more difficult for investors to have certainty that the income streams that they're buying with these loans is going to remain in place. And when we had in a good market like we've had up until about a month and a half ago, the market, the economy was strong. We had favorable job growth. Income was raising on a year-over-year basis. And so the risk for borrowers was relatively low. That's no longer the case. The property values generally across the country have been increasing. We have some markets that are atypical, but at the macro scale, the markets have been pretty good. We don't know what they are right now. So as a lender, I'm going to sell this loan to Fannie Mae, and Fannie Mae is going to package it and sell it to the investor market. The investors are saying, we are now more reliant upon this collateral as a potential means of repayment than it's ever been in the past, in the recent past. And so lenders, having gone through the last recession, and many having had repurchase requests because there was some kind of deficiency or perceived deficiency in the loan portfolio that had been sent in, lenders are very concerned and very cautious about trying to put together a loan file that may result in a repurchase request from the secondary market. So while there are mechanisms in place, and for those properties where there's a very low debt ratio and where the borrower has a very good credit score, they may qualify for a drive-by or desktop appraisal. But the rest of these properties are a higher risk for the lender. They're a higher risk of repurchase, and so many of these lenders are concerned about putting themselves in a situation where they have a loan that has a higher potential for a repurchase, particularly when we're not sure about the quality of the collateral. Now, the reality is as appraisers, we find ourselves in a difficult situation. On the one hand, we should be grateful that the financial markets believe that what we bring to the table in terms of that observation and analysis that we can provide is valuable, and they would prefer to have that at this period of time. On the other half, we put ourselves at risk by entering these unknown environments. So the advice is this: if you are someone with a compromised immune system, don't go out and visit properties that are owner-occupied or that are occupied. If you are sick in any way, don't go out and inspect properties. Now, what are you going to do? You might contact your clients and say that you are in a position where you're in a high-risk category, you've got a compromised immune system. I would like to see if I would be able to perform appraisals for you by doing either desk reviews, field reviews, drive-by appraisals, or perhaps new construction or vacant homes. If you are going to occupy a existing home where it's if you're going to appraise a property that has an occupant, you need to take appropriate precautions. Now, I have some staff that schedule my appointments for me, and we have a protocol where we ask them if they've traveled outside the country or outside the state in the past 2 weeks. If they have, we don't go to the property. We ask them if anyone has been in the household or who has been in the household in the last 2 weeks has had any kind of illness. If they have, we don't go to the property. We notify the lender and let them know of the circumstance. They can either put it on hold or cancel the assignment. If those two things are not flagged, then we notify them that the appraiser that's coming to your home is healthy. There's not been any symptoms that have been manifest at this point. The appraiser will sanitize his hands before he comes to the home. He will have gloves on, and we would ask the property owner to have the doors and open, the lights on, and have all parts of the house accessible with so that the appraiser can touch as few surfaces as absolutely possible, and that we will maintain a social distance of at least 6 feet. We would invite the people to even stand in the backyard or in other areas so that we can minimize our risk to ourselves and the risk to the property owner. I think the last thing any of us would want to have, and this is a risk that we potentially have, is that if I'm asymptomatic or I've been exposed and I don't know it, and someone were to contract the disease as a result of my exposure to them, there'd be some possible liability. Now, the reality is that given what we know of the virus, if you are sanitizing, if you're maintaining distances, if you're wearing gloves, the risk is very low at this point. But those are some of the things that we would encourage you to do to deal with this over the next little while. And we will keep you posted on some of these changes as they develop. Some states will not allow appraisers to leave their homes. If you're in some of these states where appraisers are a non-essential service provider, stay home. Don't risk getting fined, but you still may communicate with your clients and see if there's some kind of desktop or other kind of service that you can provide. And I know for us, we try to do as much prep work as we can, and this may be an opportunity to have some of these assignments that may be delayed that would allow you to do some of that. We wish you all well. Stay safe. Don't take unnecessary risks. Eventually, things will get back to some semblance of normalcy, but we are concerned about each of the appraisers for the entire country and hope to be able to get through this thing without too much difficulty. We will keep you informed through the NAA's 411s. If you're not a member of NAA and would like to join, go to the website. If you're not a member of your state association, join. Whether the association's affiliated with NAA or not, your state association can help you with information and lobby in your behalf. We wish you well. All the best. Thanks. Craig Morley here.